3M, or Minnesota Mining and Manufacturing, reported full year 2023 earnings January 23rd. The results reflect the full weight of settled litigation regarding combat earplugs used in the military and polyfluoroalkyl, or PFAS, chemicals found in drinking water. We'll first look at the income statement highlights, then remove these two significant charges to get a clearer performance picture of 3M. Revenue was down 4.5% to $32.7 billion. Gross margins were slightly lower to 43.5%. For operating income, we start to see the impact of the one-time charges. EBIT was negative $9.1 billion. Pre-tax income was negative $9.7 billion, and net income earned a loss of $7 billion. The market cap for 3M is around $53 billion. The release from the company provided details of the impact of the write-offs going back to full year 2022, where adjusted earnings per share would have been $9.24 in 2023 and $9.88 in 2022. And the operating margins at 20.3% and 21.1% respectively. Let's see what that looks like. And voila! We can see that operating margin and net income were lower by around 8.5% year over year. The 5-year income statement shows revenue peaked in 2021 with a 5-year compound annual growth of just 34 basis points. Gross profits over that 5 years contracted by 1%, reflecting inflation hitting costs of goods sold. Operating profit and net income have been growing at 144 basis points and 253 basis points respectively, as 3M would be improving operational efficiency over those 5 years. The 3-year compound annual growth rate tells a different story, however, with post-COVID growth declining across all the line items from their peak in 2021. Looking at the business segment revenue over the 5-year period, the healthcare segment has been growing at 2%, while the other 3 business lines, safety and industrial, transportation and electronics, and consumer, all contracting from 240 basis points to 40 basis points. We can see here during the 2021 revenue peak that all business lines were performing well. The 3-year growth rates haven't been all that impressive, with contraction between 3 and 5%. Perhaps firms and consumers are not so eager to buy from 3M given the recent litigation problems. We now turn to financial ratios. Please keep in mind that these ratios are based on the extraordinary costs from the military earplugs and public water system charges being removed from the respective financial statements. First of all, 3M retired 13.7 million shares, or about 2.4% last year. Earnings per share came in at $9.24, down 6.5%. Sales per share are $59, slightly lower year over year. Cash per share was up 66% to $10.71. Book value was down 66% to $8.79. Equity took a big hit from the legal settlements and will remain so going forward. It wasn't backed out of the calculations. The P of 3M is only 10.4 compared to the S&P 500 with a PE of 26.4. The PE growth rate stands at negative 1.6. The debt ratio has improved to 0.26, with long-term debt falling by $1 billion and total assets increasing by $4 billion, partly due to higher cash. Debt to equity took a big hit to 2.7, with equity down by $10 billion. Interest coverage was worse due to lower operating incomes and higher interest expense, though 11.8 is a healthy number. Liquidity ratios have a good current ratio at 1.07, the quick ratio at 0.7, and the cash ratio at 0.39. Return on assets were 10%, lower by 16% year over year. Return on equity is distorted by the write-offs. Return on capital invested was 18.8%. Return on invested capital was 8.6%. The cash flow data is quite good. Operating cash flow was up 20% to $6.7 billion. Investing outflows were $1.2 billion, while financing outflows were $3.1 billion. Free cash flow to the firm was up 62% to nearly $6 billion. 3M paid $6 in dividends in full year 2023, yielding 6.2% with a growth rate of 0.7%. Enterprise value stands at $60 billion, which translates into a 1.85 revenue multiple and a 10.2 to free cash flow multiple. Market cap to net income is 10.4x. 3M's guidance was that sales would be 0.2 to 2.25%. We conservatively used 1% in our 2024 estimate. They also said the EPS would be between $9.35 and $9.75 per share. We use the midpoint, or $9.55, in our estimate and 2023 outstanding shares to arrive at net income. We use the 5-year average of 45.8% to calculate gross margin and the operating margin average of 20.7% to complete our estimate for 2024. 3M is currently trading at a 10.06 multiple using our $9.55 as earnings. Key takeaways on the pro side is that 3M has a low PE, good cash flow, its litigation problems are behind it, and the dividend yield is still quite good. On the con side, however, revenue and margins have been contracting over the past 5 years and more so in the last 3 years. It's our contention that the nature of the legal disputes, public water contamination, and faulty equipment for the military have brought some reputation risk to Minnesota mining and manufacturing. The healthcare business spin-off removes the best performing business from 3M. Our rating for this company is a neutral to a buy. The share price is at a 10-year low. I mean, how much lower can it really go? But we think the share price will need to consolidate at this price range. For dividend hunters, the yield is quite good. We have no exposure to this company. Like and subscribe.